We had a wild weekend in the markets. UBS is buying Credit Suisse for $3.2 billion. We got Balaji saying that Bitcoin is going to 1 million. Kevin is in the hallway at the Holiday Inn, but guess what? Money never sleeps. Those are all things we're going to be discussing on today's show and more. Before we get going, hit that like button, subscribe to our channel. Nothing we say is financial advice. We are a couple of guys who like following the markets, enjoy the hell out of this, want to educate as much as possible. We are not financial advisors. Do all of your own research before any trading decisions. Kevin, we had a lot of news come out over the weekend. It was an action-packed one. Like I said, UBS and Credit Suisse, Balaji. We got Warren Buffett maybe coming in and saving the U.S. How are you doing, man? How's your Monday?
Oh, I'm doing great. There was tons of fun stuff I was seeing over the charts this weekend. It's a lot better than just up only. At least the charts are telling us a different story than what a lot of people are expecting right now. But I'm very excited. Tons of stuff to get into today. So let's do it.
All right, let's just dive right in. We found out over the weekend the deal is being finalized where UBS is going to be taking over Credit Suisse to the tune of $3.2 billion or 3 million Swiss francs. I love being able to say Swiss francs today. Shareholders of Credit Suisse are taking about a 60% haircut based off of where the closing value was on Friday. And one of the biggest losers in all this is Saudi National Bank. 15 weeks ago, they injected 1.1 they are losing 1.1 billion francs compared to what they put into the bank 15 weeks ago to help provide liquidity. So not great right there. There's a lot of optimism that this is going to stop the bleeding over in Europe. I don't know if that's going to really, if there's more contagion to come from the fallout of this and how that's going to impact the U.S. as well. But that was the biggest news from the weekend.
Yeah, absolutely. And again, a lot of people are expecting this to be bullish for the markets. They think, the crisis is over. But, history is a weird thing. We always look back at history and say history often repeats. And when I look back to the last financial crisis, I look to Bear Stearns being acquired by JP Morgan. And then just to follow what happened after that. And the funny thing is it actually happened March 16th when they got acquired. And we're, oddly enough, in the middle of March,
around there,
right here. And again, we didn't see the markets really collapse until September of later that year. Obviously the summer, but September was when we saw the massive red candles. But it's definitely, it feels very reminiscent of 2008 in some ways. But I don't know. I don't buy the bullish sentiment that, this is out of the way. The banks are going to be fine. I think there's a lot more banks that are be facing liquidity issues in the coming months. The exposure. And again, look at how bad investors got the shit end of the deal on this one. Like, that's a pretty bad cut. I mean, There's at one point, what was it, 27 cents per share or 27 cents on the dollar for what someone had offered. And even Justin Sun tried getting in on this. So it's tons of weird stuff going on with this. But it's something I definitely want to see, over the next few weeks, next few days, and see if this has any more potential contagion, not just in Europe, but, in the global markets, global economy.
For sure. Another big piece of news from the weekend, all over Twitter. There were articles written about it, but Balaji Srinivasan, I hope I pronounced his name right, co-founder of Council, former CTO of Coinbase, and former general partner at Andreessen Horowitz, made the claim that hyperinflation is going to lead Bitcoin to $1 million per coin in the next 90 days. He was willing to make a $1 million bet with James Medlock, who said that he'll bet anyone that $1 million that hyperinflation isn't going to happen. Well, Balaji's got a pretty big pair right there if he's willing to make that bet. Funny enough, Dustin Moskowitz, co-founder of Facebook, came in and said, "I'll take the bet, but I want to up it to $50 million." That's what he wanted to put on it. Not $50 million a coin, $50 million that it won't get there in 90 days. I don't know if Balaji took him up on that. I don't know if he wanted to be called out to that extent, but man, that would be a wild situation. I think that's pretty crazy, and I do not want to see that happen because the carnage that would take place in the financial markets to push Bitcoin to $1 million in 90 days would be devastating. It would lead to civil unrest. It would be a very, very terrible situation for the global economy. So I don't think he's going to be right, and I pray that he isn't, because that would just be absolutely brutal.
Yeah, 100%. It would be total carnage. Anyone holding Bitcoin would be like the biggest target in the entire world. But I think it's just so outrageous. Again, it's Bitcoin definitely, possibly, at some point in the next 10 to 20 years, possible that we hit $1 million. Again, just maybe the market continues to grow. I don't see that in 90 days. That's so super unrealistic. And I think a lot of people will understand that too. But yeah, it's just the fact that we're talking about price speculation right now when we're still below all-time highs by more than 50%. Kind of tells me that, okay, we're reaching somewhat of a top in this little rally right now. And maybe we'll see that in the charts. I don't know. I've seen some stuff that could be telling us that the momentum could be shifting. But yeah, I'm seeing tons of price speculation. This is no different. A lot of people are getting excited. It was trending all over Twitter. That's usually a pretty good sign that people are getting a little too excited for what's coming. And, the move was at 19.5 if we want to talk about this short squeeze. I don't know if the move is at 28K. That's the thing I question. So 90 days, I think we'll still see Bitcoin somewhere in this range, but $1 million, I don't think we're going to see 7 digits anytime soon.
Yeah, my understanding is his thesis behind this was Fed is going to cut rates. The money printers are going to get turned on. Another few $1 trillion injected into the banking system to try to help stop the bleeding there, and that's what would lead to hyperinflation. I hope to God that they don't turn the money printers back on. I get that this banking crisis is bad. At the same time, it's short-term pain compared to what would happen in the markets, in the economy, if the money printers went burr again. And I don't want to see that happen. We can move on. Last thing from the weekend that we can talk about, Warren Buffett is saving the day, baby. We had banking execs from all over the country flying into Omaha. There were also, Twitter's so funny. There are all sorts of private jet trackers, and they're 20 private jets are flying into Omaha. Warren Buffett is going to buy the banks. It was just absolute ridiculousness. Biden administration officials talking to Buffett about him possibly investing in U.S. banks, also just getting his opinions and help in general. So, it's a tough scene when you're just praying to God that Warren Buffett is going to be the one. He's Batman. They had to put up the Buffett signal to get him to help save the markets. But he's obviously a very smart guy, incredibly successful, shit ton of money. So I'm interested to see if he does provide liquidity to some of these banks, if he becomes a holder of some of them, what the hell happens here. But absolutely wild turn of events this weekend.
If they are actually asking them to bail out the, U.S. banks and stuff like that, just provide liquidity for a lot of them or invest in them, I have a funny feeling this dude is just going to be go fuck yourself. And that's only because he's been in the market so long and he's seen so many years where it's just been absolutely terrible that he's this is the game. This is how you play it. Again, I don't know if he's going to be more kind to politicians or anything like that. Maybe not because of capital gains tax and how high it's been in this country for a long time. But the point is, this dude has been in the game for a long period of time. He knows how it's played. He understands that it's necessary for a few years of bad, a bad market, bad economy in order for everything to heal so that you can move forward. There's a reason why he's successful. It's because he's been in the market so long. He's been there when the S&P was at, I don't know, $67 years ago. So, again, I'm not joking there, but point is there's tons of, this dude knows how the game is. I don't think that anyone hoping that he's going to bail out the United States, I think the best thing you're going to get is his 2 cents, nothing more.
Yeah, for sure. It's not the greatest situation. Why would he do it? You've seen what's happened in the last week when all this money from other banks got put into the struggling ones. Well, guess what? The share price still took a nosedive. It didn't stop the bleeding. It was just an opportunity for shareholders to get some liquidity to get the hell out of there. So I don't think he's going to do it, but that's just, what the hell do I know, man? But it's nothing about what we've seen over the last week makes it seem like it's a good idea to hey, let me go put money into these banks to stop the bleeding, because the bleeding just intensifies at that point.
Oh yeah, 100%. It's just you're giving liquidity to other people who are ready to pull out at any minute.
It's literally a Band-Aid on a bullet hole. It's awful. That about wraps up the weekend news that we wanted to discuss. Coming up this week, all eyes are on the FOMC on Wednesday. Leading up to that, we'll have more attention on the banking sector, seeing what is going on there. That could potentially impact Powell and the Fed's decision on if they're going to raise rates at all, or if they're going to leave them. The latest projection from CME Group and this could change by the time I finish this sentence, is that it's 30% chance of no hike, 70% chance of 25 basis points. Hearing a lot of people saying, they shouldn't raise at all, like they need to stop or pivot. I don't know what the right decision is. I'm not sure Powell and the Fed knows what the right decision is. I still think that they're going to stick to their, our mandate is to get inflation to 2%. However, that could change any moment now if we get more information from the banks.
Yeah, I couldn't agree more. My conviction right now, just from everything that's happened in the past 2 to 3 weeks, even a month, how much it's fluctuated from 50 to 0 to 25. I think it's 25. I think that's probably the safest route for the Fed at this point, because at the end of the day, you still need to bring inflation down by the end of this year. They want that 2% terminal rate, or the 2% inflation rate, my bad. And, just stopping for a month, and then we're not going to have another rate hike again until May, I believe, correct? Because April, there's no meeting.
Yep, no meeting in April. There is one early May.
Yeah, so they're definitely going to have to take some course of action. Otherwise, we did see the PC data come back a lot hotter than we had anticipated. Granted, inflation and PPI numbers came back a little bit better, or at expectations.
Sorry, the data moved. It's now 75% chance of 25 basis points. So my prediction of it changing before my sentence ended was correct. Look at that.
That's why you guys listen to us. All right. So I think that's probably the most realistic option that's going to happen here. Again, I don't think Powell and the Fed are ultimately going to take their foot off the gas when it comes to inflation. I think they've been extremely negligent in some ways, but I think that their main focus is inflation. I think that's their key battle. Is a recession on the table? Absolutely. I don't think that that's ever off the table when you're having rate hikes and you're seeing banks collapse. That's usually a sign of a recession. However, we could, like you said, a Band-Aid and a bullet hole. We could hold this up as long as we want. End of the day, the numbers don't lie, and eventually it's going to come bite us in the ass. So it's a matter of time, but it's not about timing when it's going to actually collapse.
Yeah, I think my opinion as well is that it'll be 25 basis points. However, a few weeks ago, we were talking about the Fed maybe having to take it up to like 5.5%, 5.75% for the Fed rate. I'm now thinking that number is going to probably be closer to 5. A 25 basis point hike on Wednesday would put the Fed rate at about 4.75 to 5%. And I wouldn't be shocked with the fact that they aren't meeting again till June. If we get some decent numbers in April, maybe that's their sign that, okay, we're going to pause for a while. And down the road, we're going to pivot, because if we zoom out on the calendar, we got meeting on Wednesday, early May, June, and July. So I could see a situation where they raise this month. Maybe we see data continue to show that inflation's on the downtrend. They potentially pause May, June, July, and then in September could potentially pivot. Now that could change at a moment's notice, but I think it's more likely that they say, like, okay, we're going to take this up to 5% terminal rate. And we're going to leave it there for a while, let the banks catch up, see what happens with inflation, and then take our foot off the gas.
It'll be really interesting what we see also from the market in April, because we're going to be getting earnings reports as well. Obviously, Q1 is going to be over. Again, the market itself doesn't affect the economy and what the Fed decides. I think banking has a lot more of an impact than the actual market price does. But for the most part, I think Powell is, like you said, 25 basis points. Maybe they take their foot off the gas. They see how April plays out. If they get some of those good numbers in CPI and PPI, maybe even PCE. But yeah, I think that's probably the course of action. I think this is going to play out. This is going to take some time. I think a lot of people who are speculating us going to 1 million and people who are expecting us to go to 10,000 overnight, it's not going to be the play. It's going to be when we least expect it. Just as, oddly enough, I'm bringing back 2008. 2008, we didn't expect it to just drop as fast as it did in September. And, I expect that to happen this time around too. Again, who wants you to win in this market? Not people with a lot of money. They just want to keep adding on to it. They want you to be exit liquidity. And I was looking at the Bitcoin Fear and Greed Index right now. It was like 66, which is pretty high.
Oh man. Yeah, but it's a tough situation though, because like I personally am wrestling with this. I have some money that I would like to deploy into crypto because I don't want to leave it in the banks at the moment. Right. I believe that the bank I'm in is safe, but so did people in Silicon Valley Bank. At the same time, do I want to be buying right now with how hot things have been? I don't know. And just a quick update, there's really no other report. There's nothing happening report-wise, existing home sales tomorrow, but nothing else before the Fed's decision. And then next Friday, the 31st, we get the next piece of PCE data.
Ooh.
So we'll have PCE data for February coming out on March 31st. And then April, we'll get another batch of, jobs report, CPI, PPI, another PCE. So more data for the Fed to chew on before their next decision after this one on May 3rd. So still plenty of data to come. Going to give us a little clearer picture on if this trend is in the right direction, a little bit more time for all those 75 basis point hikes last year to kick in and take effect. So my hope is that they raise 25 here. They're able to pause. They're able to let it sit at that rate for a while. And then Q4 of this year, late Q3, they can start, slowly lowering the rate. Like that's what I think. And that's what I hope is the move. And that kind of lines up. We've seen it as well. The data shows that the biggest market crash doesn't happen until after the Fed pivots. Well, if the Fed pivots in September, which is right around what you said happened in 2009 with JP Morgan taking over Lehman Brothers, like or was it Bear Stearns they took over?
In 2008, like they bought Bear Stearns to keep them from going from bankruptcy.
Yeah, so and it crashed in September. So the timelines are kind of mirroring, which is weird. I don't think you should put any like credence into that. Like history doesn't necessarily repeat itself; it leaves clues, yada yada yada. But that could be setting up for in September of this year. After the Fed pivots, maybe late September, early October. That's when we see the bottom fall out. So I'm still operating under the assumption that I need to have my long-term holdings that I'm okay not touching. The stuff that I'm playing with in the short term, don't be afraid to take some profits here or there, is all I'm going to say.
Yeah, I couldn't agree more. And with that being said, I do want to go into some of the Bitcoin charts because I'm not going to lie, Bitcoin went up a fucking ton over the weekend. And, it's awesome. If you're in the trade, that's great. However, there are some things on the macro that should be noted and we should get into it because, I don't know how long this market's going to hold up. I really don't. That's why I'm so risk off. I haven't been in the markets at all for months, and I'm comfortable with that. So I'm just pulling up Bitcoin right now. This is the Bitcoin chart on the USD pair. And Friday we didn't have our show, but I sent out a thread talking about the supply zone. The supply zone is pretty much this area right here at 25,280 to 28,809. And when I sent that tweet out, we were right around here. We were around 26,000, and we shot up to I think it was 28,472. So got pretty close to the top of that supply zone. And pretty much what this is an area of distribution. That's what I'm expecting it to be. And that area of distribution is pretty much people who have positions that are just offloading to people who are buying in that area. So when I pull up this, the way I'm pulling this zone up is pretty much just filling gaps that are in monthly wicks. So if I pull this up, we're looking back at history. We got a wick down here that creates the bottom level of support. And then up here is the resistance. As we came down, this was support for these areas, but we broke through it. So we're between the support and resistance level, and we're just filling these gaps. These are wicks from 2021, from May, June, July, and then even as far back as January.
All of these pop-ups on TradingView are getting so ridiculous, by the way.
I know. It's gotten like 10 times worse, too. Like on my phone, I can't even press the X anymore. I don't have fat fingers, JWeb. I got tiny little fingers. Just go. I'll have to buy the fucking full just so they shut up. All right. So anyways, that's what I'm saying. This is a supply zone. We're going to see distribution in this area. I don't think it's just because we hit this pretty fast doesn't mean we're necessarily going to fall right out of it. I mean, on the macro, it could look like that on the monthly, but if I look at the daily, I think that we're going to trade in this area just a little bit similar. How we traded this way over the 250 EMA. That being said, there is some bearish divergence on the charts. I will point out that we did have this golden cross here, or not a golden cross. It's actually a death cross. Oh, no, that's a golden cross. Yeah, because the 50 comes above the 200. My bad. Yeah, we just got this right around here. Price shot up. I mean, that's pretty good trade right there if you were in it. We hit the top of this level of the supply zone, but we're also seeing from here, we were at the bottom. Where was this? This was at 19.6. That was the day of Silicon Valley. And then we see that the volume was pretty right around here, pretty high. And as the price has gone up, the volume is slowly come down. That is one sign of bearish divergence that usually tells you that there is exhaustion in a move. And also paired with the stochastic RSI, which I pulled this up right down here. I mean, we are completely overbought. Like that is flatline top hitting the ceiling of the stochastic RSI indicator. So we're at a place right now where we're extremely overbought. And this is just on the daily. If I pull up the weekly, obviously the volumes are different, but weekly we're completely overbought. We're in the supply zone. We're still hitting this area. I don't know when the market's going to decide to completely just start to see some negative price action. It's overdue. I mean, shot up $12,000 since the beginning of January. But point is, there is some bearish divergence. We're in a zone of distribution. It's where people are starting to sell and other people are starting to accumulate. And again, unfortunately, it's retail is probably going to be buying this area out of FOMO. I don't like to call people out, but there was a dude who his name is Crypto Man Ran. He was saying that 26K is extremely cheap. And I don't know if that's necessarily a safe thing to be saying. If you look at the charts, again, not financial advice ever, what I'm saying, but point is, from everything I'm seeing right here, I don't know. This seems a little bit sticky. I think the move, like we talked about before the show, was at 19.5 when Silicon Valley Bank was expected to completely collapse. And, the short squeeze was there. All the signs were pointing towards a short squeeze. And if you got in then, that was a great trade. Getting in now, I don't know. I just think that we've shot up a good amount, and I don't expect it to continue to go up. That being said, it could, absolutely. I could be dead wrong. I'm open to the fact that I could be wrong. However, we're also seeing Bitcoin dominance shoot up like crazy. Like this is the 1 week. This was last week's candle. And the grind up to the height back in June of 2022, that took 1, 2, 3, 4, 5. That took 5 weeks. And we pretty much came up in 1 week with Bitcoin dominance to almost close to the levels that we were back in June. And that's the dangerous thing, because this morning we hit not an all-time high, but a high since the last high. And that was at 47.63. Pretty good numbers there. And there's no signs of stopping it. Like, let me go to the daily chart. It's been green nonstop. Like this is up only like morning wood.
It's crazy,
like,
yeah.
It's absolutely insane. Again, we're seeing the volumes start to come down a little bit, but at the end of the day, this thing is probably going to top out at some point. Is it a double top at 48? Maybe. Could it go up to 50? Possibly. But from what I'm seeing right now, this is probably the most important chart out of them all. And if you're not paying attention to Bitcoin dominance right now against all other alts, that's probably a big mistake. If you're only looking at the price going up on the Bitcoin chart, dangerous place to be. And I do want to pull up one other thing, because this is.
Does this mean that is it shitcoin season now, Kevin? Because that's what everyone's saying. They're saying,
Yes.
What, Bitcoin is. We're seeing Bitcoin go up, so that means we're going to get that trickle down, and it is time to start buying shitcoins. That's what I'm hearing.
Yeah, I'm definitely putting a lot of money into Ligma. But
also real quick, going back to was it Rand Crypto or whatever, him saying that 26K BTC was cheap. I think a lot of these people need to be very careful with what they're saying on Twitter. We saw that big lawsuit come out, that class action suit against content creators who were promoting FTX. Yep. I think it's a frivolous lawsuit. I don't think that any of those people had inside information that FTX was going to fail. They were being paid to, they're being paid to advertise something, which everyone, like a lot of people do. But at the same time, I think you got to tread very lightly with any sort of, financial advice. Like actual financial advisors and actual people who know what they're talking about are constantly saying that, like, this is not financial advice. They're trying to, like, let everyone know it's just their opinion. Someone like that, who, from my understanding, is just a content creator, like us, obviously much bigger audience than us, but is not a financial advisor, is just spitting off at the mouth, is going up on the Twitter Spaces with Mario. That guy needs to probably watch his step, because that shit is recorded. That shit is, on Twitter. Like, he could get into it if things go downhill. So that's all I'm going to say, is these people need to tread lightly.
Yeah, I sent out a tweet. I'm like, this guy's going to be similar to the Bill Miller, which was, if you've ever seen The Big Short, that's the dude that Mark Baum, Steve Carell is like debating at the end of the movie, and Bear Stearns is collapsing. He's like, I'm going to keep buying Bear Stearns. It's still a good price. And it fucking collapsed. Again, that's the type of thing where it's like we're seeing ultra bullish like price speculation and people are like super excited. Yeah, I understand. Price has been down for a long time, but unfortunately the charts say otherwise, the macro says otherwise to me, and Bitcoin dominance is pretty much giving the whole game away in my opinion. So when I look at, I just pulled up KuCoin because I want to look at a bunch of alts, and we're just looking at the BTC pairs. We can see there's tons of red. Like this is negative 3.52% for Ethereum. What is that? Monero, 4.73%. Litecoin's down 5.58%. XRP is down 6.68% against Bitcoin because Bitcoin's so strong against these alts. These alts are bleeding out in the Bitcoin pairs. That's not a good sign. That means that Bitcoin's dominance is growing, so everyone is pretty much following Bitcoin for the time being. And the price of these alts are going to continue to bleed out. There's no, maybe shitcoin season does exist. It's not going to be on a BTC pair, maybe a USD pair or a USDC pair, but I don't see it with Bitcoin. I think that we're seeing tons of resistance because of how well Bitcoin's been doing over the past 2 weeks, that these coins are just following whatever Bitcoin does. So if we start seeing negative price action, I wouldn't be surprised if these things bleed out terribly. I mean, Bitcoin's going to bleed out terribly regardless, I think, when the macro does finally start to tell the story that we're seeing right now, all the markers. But these alts are going to get absolutely wrecked, in my opinion. Not financial advice. I'm just from what I'm seeing, the data. This is not pretty.
Okay. Yeah. Maybe it is shitcoin season. Maybe it's not. We are going to get a nice little stimmy into the crypto ecosystem on Thursday with the drop of Arbitrum's new token, ARB.
Oh, yeah.
So I'm very excited about that. Kevin and I are going to make that into a little bit of a segment. I'm getting a little airdrop there, nothing crazy, but I think what we're going to do is we're going to turn that into like a trading, not competition, but like see what we can do with it. So we'll use the charts, we'll put our chops to the test, and we'll see if we can turn that ARB airdrop into a little bit more money. So looking forward to that. That should be a good time. We'll kick that off on Thursday when the token drops. Kevin and I are going to hash out the details there, but it should be a fun little segment that makes things a little bit more interactive. So you can follow along, you can counter trade, you can just ignore it, whatever you want to do. Any final thoughts before we wrap it for the day, Kevin? I know that you've been hunched over in the hallway of the Holiday Inn for quite a while now.
No, I'm good. Only thing I would say is, obviously be patient, think macro. I do have some homework. If you got time, I know a lot of people are busy. Rewatch The Big Short. There's so many things in that film, or even their book. If you just want to do 2 hours of your time, go watch the film. There's so many things that'll remind you of how poorly people acted in 2008 and the years leading to 2008, how many mistakes people made, and how everyone who was in that film that became profitable was wrong for a period of time. They're pretty much just like in the red. Like Michael Burry was down. He was paying millions of dollars to people. But at the end of the day, this dude ends up coming out on top. And he still is. And, there's tons of institutions that were betting against them. They're no longer around. So there's things you have to see. All you have to do is look. And I think that's one of my favorite quotes from the film. But at the end of the day, take a look at it. It's just going to give you some confidence, hopefully, moving forward.
Okay, well said. That is going to wrap it for today. Kevin and I will be back tomorrow. We're going to be doing a live show at 5 p.m. Eastern time after the markets close, ahead of the Fed's decision on Wednesday. Wednesday should be very interesting. We'll get the Fed rate hike decision at 2 p.m. Eastern. Jay Powell talking at 2:30 Eastern. Kevin and I will go live at the conclusion of his talk, and we'll kind of break down what we heard. So that should be a fun one as well. I'm looking forward to that. I always love a good Jay Powell presser, and it's going to be the same thing. Well, it's our mandate to lower the inflation rate to 2%, and we're going to use the tools at our disposal to do so. That is going to be exactly what we hear from him. Probably a little bit more banking talk, but that's kind of what I'm expecting. So thank you, everybody, for being here today. We greatly appreciate it. Once again, hit like, subscribe to our channel. If you enjoy our content, please share us out. It means the world to us. Drop a comment. I appreciate everyone who's commented saying that they're enjoying our videos. That really makes us happy. Kevin and I love doing the show. We love trying to provide some insight, a little bit of education, and some entertainment at the same time. So we'll be back tomorrow, live show. Thank you, everybody, for being here. Kevin, safe travels. We'll see you tomorrow.
Money never sleeps. Take care, everyone.